Here's the uncomfortable truth that nobody wants to admit. Most traders are conditioned to fail from day one. While everyone's obsessing over complicated indicator setups, multiple time frame analysis, and endless chart patterns, they're missing the single most important skill that separates the wealthy from the perpetually struggling. The ability to spot explosive moves before they become obvious to the crowd, and more critically, to position yourself with the confidence to ride them all the way through. Have you ever watched helplessly as a stock you sold for a modest 10% gain proceeded to explode 200%, 300%, even 500% higher without you? That crushing realization that you traded pennies when life-changing dollars were sitting right there on your chart. If you're nodding right now, you're not alone, and what I'm about to show you could completely transform how you approach the markets. The market has a fascinating rhythm that most participants never learn to recognize. There are the little jiggles, those daily fluctuations that captivate everyone's attention, keeping traders glued to their screens, making them feel busy and productive. And then there are the massive, sustained price movements that actually create fortunes. The wealth-building tsunamis that start quietly, develop gradually, and eventually carry prices so far from their starting point that even the skeptics can't ignore them anymore. But here's where it gets interesting. By the time these moves become obvious, by the time your neighbor is talking about them and financial media is covering them, the most lucrative portion has already happened. The smart money positioned themselves weeks or even months earlier, quietly accumulating while everyone else was distracted by market noise. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? You finally pull the trigger on a promising setup, it moves up nicely, and you quickly cash out to lock in profits. You feel smart, accomplished, validated, until you watch that same asset continue its relentless climb for weeks afterward, reaching levels that would have multiplied your account several times over. That's not bad luck. That's not poor. And timing. That's a systematic flaw in how most traders are taught to think about markets. What if I told you there's one specific chart setup that reveals these explosive moves before they become mainstream knowledge? A setup so elegant in its simplicity that you don't need expensive software, complicated algorithms, or insider information to spot it. This isn't about prediction, it's about recognition. Learning to see what's already happening on your charts, while everyone else remains blind to it. Stay with me until the end of this video, because what you're about to discover might challenge everything you thought you knew about catching big market moves. I'm going to show you exactly how to identify this setup, how to position yourself ahead of the masses, and most importantly, how to develop the conviction to stay with these trades while they transform from promising opportunities into extraordinary wealth builders. The question isn't whether these explosive moves exist. They're happening all the time across every market. The real question is, will you finally learn to catch them before the crowd? The hidden truth behind most trading failures has nothing to do with market conditions, economic data, or even chart reading ability. It's something far more personal, far more insidious. The real enemy sitting between you and extraordinary returns is impatience, that restless, uncomfortable feeling that starts creeping in the moment you're holding a winning position. That voice whispering, "Take the profit now before it disappears." We're hardwired for immediate gratification. Our brains evolved in environments where grabbing the certain reward right now was almost always the better survival strategy. But markets operate on a completely different timeline, one that rewards those rare individuals who can override this ancient programming and sit through discomfort for truly meaningful gains. Think about the psychology behind this for a moment. You enter a trade. Based on solid analysis, it moves in your favor, 5%, 10%, 15%, and suddenly that profit feels real, tangible, something you can actually count. The fear of losing it becomes overwhelming, so you exit, you celebrate, you feel smart. Meanwhile, the chart continues its journey, indifferent to your decisions, eventually reaching levels that represent not just gains, but transformation. If this resonated with you, hit that subscribe button so we can continue this journey together. The community we're building here is focused on substance over hype, on real insight over quick tactics. This pattern repeats itself thousands of times daily across every market. Traders celebrating their discipline of taking quick profits while simultaneously destroying their potential to build substantial wealth. The impact of this mindset is devastating because it feels responsible, it feels prudent, when in reality it's the very behavior that keeps most people trapped in mediocrity. Now, I want to go even deeper into this topic by revealing something that might surprise you. The chart setup I'm talking about doesn't involve complicated indicator combinations or proprietary algorithms. It's not hidden behind expensive courses or insider knowledge. What makes this approach powerful isn't complexity, it's clarity. The ability to look at price action and instantly distinguish between two fundamentally different phenomena: meaningless market noise and genuine momentum. Building. Most traders drown themselves in information. Multiple time frames, dozens of indicators, constant news feeds, all creating this overwhelming fog that obscures the only thing that actually matters. What the chart is genuinely telling you about supply and demand dynamics. Behind the scenes of every explosive move is a simple truth that becomes visible when you strip away the noise. Markets don't move randomly. They move in patterns driven by the collective behavior of millions of participants, and these patterns leave footprints. The journey from being a reactive trader to becoming someone who spots opportunities before the crowd requires a fundamental shift in mindset. You need to stop looking for complexity and start recognizing simplicity. This one chart setup reveals accumulation happening in real time, shows you when smart money is positioning, and telegraphs the beginning of significant moves before they become obvious to everyone watching financial television. What's fascinating is how this revelation changes not just your trading results, but your entire relationship with markets. You stop feeling anxious about missing moves because you develop confidence in your ability to spot them early. You stop obsessing over every tick because you understand the difference between signal and noise. If you've ever felt trapped between wanting bigger gains but always exiting too early, write in the comments, "Patience is my edge." There's a moment of clarity that happens when you truly understand what you're looking at on a chart. It's like learning a new language. At first, everything looks like random symbols, but then suddenly the patterns start speaking to you. You begin to see the difference between a temporary price bump created by short-term enthusiasm and the deliberate, methodical accumulation that precedes a major trend. This distinction is everything. The transformation that occurs when you develop this skill is profound. You're no longer reacting to what happened yesterday or trying to predict what might happen tomorrow. Instead, you're reading the present moment with absolute clarity. You're observing how price responds to certain levels, how volume behaves during pullbacks, how the chart maintains structure even when news tries to shake it. This is real-time intelligence that most traders completely miss because they're too busy drowning in indicators and opinions. Behind the scenes of every explosive move that seems to appear, out of nowhere, there was a period where this setup was clearly visible to anyone who knew what to look for. Smart money doesn't hide their tracks perfectly. They can't. The sheer volume of capital being positioned leaves unmistakable footprints for those trained to recognize them. When you position yourself alongside these early signals, you're essentially getting a front-row seat to the show before the general public even knows it's starting. But here's where most traders hit an unexpected wall, and it's not the wall you'd imagine. The hardest part isn't spotting the setup. Once you know what to look for, identifying these patterns becomes almost mechanical. The real challenge, the one that separates traders who achieve extraordinary results from those who remain perpetually frustrated, is staying power, the psychological fortitude to maintain your position once you've entered it. Something fascinating happens the moment you have capital at risk. Every tick becomes magnified in your mind. A small pullback that would have meant nothing when you were watching from the sidelines suddenly feels like impending disaster when it's your money on the line. Your heart rate increases, your palms sweat. That primitive fight-or-flight response kicks in, urging you to do something, anything, to relieve the tension. This is the moment of truth, the crucible where most traders fail. Not because their analysis was wrong, not because the setup didn't work, but because they couldn't tolerate the natural discomfort that comes with holding a position through its inevitable fluctuations. They exit at the first sign of weakness, convincing themselves they're being prudent, when really they're just seeking relief from psychological discomfort. The journey from recognizing opportunity to capitalizing on it fully requires a complete mindset shift. You need to understand that every significant trend will test you. It will pull back at the worst possible moments. It will make you question your analysis. It will whisper doubts in your ear. These tests aren't random. They're features of how markets function, designed to separate committed capital from uncommitted capital. What changes everything is when you stop viewing these fluctuations as threats and start seeing them as confirmation that you're in the right place. The volatility that scares everyone else becomes your ally because you understand its purpose within the larger structure. If you've recognized that your biggest trading obstacle is staying with winning positions, drop in the comments, conviction over comfort. There's a liberating truth that completely changed how I approach markets, and it might challenge some deeply held beliefs you have. The market is always right, not sometimes, not when it agrees with your analysis, always. This isn't a philosophical statement, it's a practical reality that transforms everything once you fully embrace it. Most traders spend enormous energy arguing with price action. They see a chart moving against their thesis and think, this doesn't make sense, it should be going the other way. They hold losing positions out of stubbornness, convinced the market will eventually validate their opinion. But the market doesn't owe you validation. It doesn't care about your research, your conviction, or how much time you spent analyzing fundamentals. It simply moves according to the collective actions of all participants, and that movement is the only truth that matters. The revelation comes when you stop trying to impose your will on the market and instead align yourself with its momentum. Think about a surfer for a moment. Does a skilled surfer try to change the direction of a wave? Does she argue with the ocean about which way it should flow? Of course not. She reads the wave, positions herself correctly, and rides the energy that's already there. This is the mindset shift that separates sustainable success from constant frustration. If this opened your eyes to a different approach, giving the video a like helps others discover these ideas too. It's a small gesture that amplifies what we're building together. When you adopt this perspective, your entire decision-making process transforms. Instead of looking for reasons why the market should do something, you observe what it's actually doing and position yourself accordingly. You become adaptable rather than rigid, responsive rather than stubborn. The emotional energy you were wasting on being right gets redirected into the only thing that actually matters, making profitable decisions based on reality. This connects directly to another revelation that might surprise you. For years, traders obsess over perfect timing. They want to buy at the absolute bottom and sell at the precise top, as if precision equals profitability. But here's what nobody tells you. Chasing perfection is a gambler's game, not a trader's strategy. The real money, the wealth-building moves that actually change lives, happen in what I call the fat, juicy middle of a trend. Picture a major price movement from beginning to end. The early stages are uncertain, choppy, ambiguous. The final stages are equally unpredictable as the trend exhausts itself. But in between these extremes is this beautiful, substantial middle section where the direction becomes undeniable, where momentum is strong, where the risk-reward ratio tilts dramatically in your favor. This is where fortunes are made. The impact of embracing this middle ground approach is profound. You stop torturing yourself trying to catch exact turning points. You stop exiting positions prematurely because you're worried about giving back profits from a perfect top. Instead, you focus on the portion of the move that's actually capturable, the clear, strong directional phase where conviction is easy to maintain and the trend does the heavy lifting for you. What makes this strategy so powerful is its psychological sustainability. When you're not demanding perfection from yourself, when you're not trying to outsmart every other market participant, you trade with clarity and confidence. You recognize that missing the first 20% and the last 20% of a move is completely acceptable if you capture the 60% in the middle. That middle section alone contains more profit potential than most traders accumulate in years of trying to be perfect. If this shift from perfectionism to practical profitability resonates with you, write in the comments, "Middle path wins." Here's something that will either liberate you or make you uncomfortable, depending on where you are in your journey. The market never provides certainty. Not tomorrow, not next week, not ever. It offers hints, subtle signals, indications that something might be developing, but it never hands you a guarantee wrapped in a bow. And yet, most traders approach markets as if certainty is just around the corner, waiting for one more indicator, one more confirmation, one more piece of data that will make everything crystal clear. The hidden truth is that by the time everything becomes obvious, by the time all your confirmations align and every doubt is removed, the opportunity has already matured. The most profitable portion of the move has already happened. You're essentially boarding the train as it's pulling into the final station, wondering why your results never match your expectations. Your competitive edge in markets doesn't come from eliminating uncertainty. That's impossible. It comes from developing a higher tolerance for operating within uncertainty than the people around you. Think about what this means practically. While others are paralyzed, waiting for perfect clarity that will never arrive, you're taking calculated positions based on probable scenarios. While they're demanding guarantees from a system that doesn't provide them, you're comfortable acting on strong signals, even when outcomes remain uncertain. This mindset transformation is profound because it changes your entire relationship with decision-making. You stop seeking permission from the market to enter trades. You stop waiting for some external validation that you're doing the right thing. Instead, you develop internal conviction based on your understanding of how these explosive setups develop, and you act decisively even when discomfort is present. What's fascinating is how this connects to something that seems completely counterintuitive in our action-obsessed culture. The biggest profits don't come from constant activity. They come from patience, from strategic inaction, from the discipline to do absolutely nothing once you've positioned yourself correctly. Our culture celebrates busyness. We're conditioned to believe that more activity equals better results, but markets operate on a completely different logic. In trading, excessive activity is often the enemy of wealth. Accumulation. Every time you exit a working position to chase something new, every time you close a trade because you're bored or anxious, you're interrupting the compounding process that creates extraordinary returns. Behind the scenes of every trader who's achieved remarkable results is this uncomfortable pattern: long periods of apparent inaction. They identify powerful setups, position themselves thoughtfully, and then exercise the rarest skill in markets: the ability to sit still while their thesis plays out. This isn't laziness, it's strategic discipline. It's recognizing that once you've done the hard work of identifying a genuine explosive move before the crowd, your job becomes protecting that position from your own impulsive tendencies. The journey from being an active trader to becoming a patient trader requires confronting some deep psychological patterns. We're hardwired to do something when we feel uncertain. Taking action relieves anxiety, even when that action is counterproductive. But the most profitable trades often come from simply refusing to exit positions that are working exactly as anticipated, even when every fiber of your being is screaming to lock in profits or cut losses during normal fluctuations. If you've discovered that your own impatience has cost you more than any market movement ever could, write in the comments, "Stillness is strength." Something that fundamentally changed my entire approach to holding positions through explosive moves was understanding this critical distinction. Markets never move in straight lines, ever. They breathe, they advance with enthusiasm, pause to consolidate, pull back to shake out weak holders, then resume their journey. This rhythm is as natural to markets as breathing is to living organisms, yet it's the very thing that triggers panic in most traders. The skill that separates those who capture full moves from those who get shaken out prematurely is discernment. The ability to look at a pullback and instantly recognize whether you're witnessing a healthy correction within a continuing trend or an actual reversal that signals the end of the move. These two scenarios can look remarkably similar in their early stages, but they lead to completely different outcomes for your account. A correction is simply the market taking a breath. It's profit-taking from early entrants. It's sideways consolidation that builds energy for the next leg. It's a normal and necessary pause that actually strengthens the primary trend. A reversal, on the other hand, is the market fundamentally changing its mind about direction. The character of price action shifts, the underlying momentum dies, and what was once a powerful trend becomes a memory. Behind the scenes of every major move are multiple corrections that test your resolve. These aren't random, they're features of how explosive trends develop. The market seems almost deliberately designed to separate you from your position before the biggest gains occur. If you react to every pullback as if it's a reversal, you'll find yourself constantly exiting positions right before they make their most significant moves. The transformation happens when you develop an intuitive feel for trend structure, when you can look at a chart during a pullback and sense whether the underlying momentum remains intact or whether something fundamental has shifted. This doesn't come from studying theory. It comes from observation, from watching countless trends develop, from experiencing the pain of exiting too early and the reward of holding through temporary weakness. What's fascinating is how this connects to something even more fundamental about trading success. For years, I believed that superior intelligence and analytical ability were the primary determinants of profitability. I thought the smartest traders made the most money. I couldn't have been more wrong about what actually matters. Emotional resilience trumps raw intellect every single time. During significant market movements, the greatest challenge isn't identifying the setup or understanding the pattern. It's maintaining your conviction when everything around you seems chaotic, when news headlines contradict your position, when friends question your judgment, when your own internal voice whispers doubts during normal volatility. The impact of this realization is profound. I've watched brilliant analysts with extraordinary minds fail spectacularly as traders, not because their analysis was flawed, but because they lacked the emotional fortitude to act on that analysis when markets became uncomfortable. Meanwhile, traders with average analytical skills but exceptional emotional control consistently outperform because they can hold positions through the turbulence that creates wealth. Your intellectual capabilities become almost irrelevant compared to your ability to remain centered during chaos, to maintain clarity when others panic, to hold steady when every instinct screams to exit. This inner strength, this psychological resilience, becomes your most valuable asset in capturing explosive moves from beginning to end. If you've realized that emotional control matters more than market knowledge, write in the comments, "Mind over markets." Here's a liberating truth that completely transformed my relationship with trading outcomes. You don't need to be right on every trade to build extraordinary wealth. In fact, you can be wrong more often than you're right and still generate remarkable profits if you understand one fundamental principle: asymmetric risk-reward. The mathematics behind this are beautiful in their simplicity. When you structure your approach so that losses are consistently small and winners are allowed to run substantially, the entire equation shifts in your favor. You could have a 50% win rate, completely average by any measure, but if your winning trades produce 5 times what your losing trades cost, you're building wealth systematically regardless of how often you're wrong. This revelation removes an enormous psychological burden. You no longer need to torture yourself over every losing trade. You stop obsessing about being right all the time. Instead, you focus on maintaining favorable risk-reward dynamics across your entire approach. The pressure to be perfect disappears, replaced by a sustainable framework that actually works with human psychology rather than against it. What's fascinating is how this mindset shift creates a cascade of improvements in your decision-making. When you know that no single loss can damage your account significantly, when you understand that your methodology doesn't require perfection to succeed, you trade with greater clarity and conviction. The fear that paralyzes most traders loses its grip on you because you've structured your approach to survive being wrong. Now, let me share something that completely changed how I identify these explosive setups before they become obvious. Behind every price movement on your chart is a story being told in real time, a narrative about accumulation, distribution, supply and demand dynamics, and the gradual transfer of assets from those who don't understand what they're holding to those who do. Markets have their own language, and most participants never learn to interpret it. They see prices moving up and down randomly, reacting emotionally to each fluctuation without understanding the underlying dialogue happening beneath the surface. But when you develop the ability to read this language, everything changes. You start seeing footprints that telegraph major moves long before they become apparent to the average participant. Institutional money doesn't suddenly appear in a position overnight. These sophisticated players accumulate gradually, strategically, often using weakness as opportunity to build positions without driving prices against themselves. This process leaves distinctive patterns in price action for those trained to recognize them. Periods where prices hold support despite negative news, subtle shifts in volume characteristics during pullbacks, tests of key levels that absorb selling pressure without breaking down. The transformation in your results begins when you shift from reacting to completed moves to recognizing the early stages of accumulation. It's like learning to identify storm formations on the horizon rather than waiting until you're standing in the rain. The signs are always there: increased responsiveness at certain price levels, resilience that seems to defy the prevailing sentiment, quiet strength building beneath the surface. This observational skill doesn't come from theoretical study alone. It emerges from dedicated attention, from watching how real trends develop across different market conditions, From training your eye to spot the difference between random noise and purposeful accumulation. If you're starting to see markets as a language, rather than random chaos, write in the comments, "Charts speak volumes." There's a fundamental distinction that separates those who build substantial wealth from those who remain perpetually frustrated, and it might challenge what you've been taught. The most significant profits don't come from following trends. They come from positioning yourself ahead of the crowd. By the time a move becomes obvious on everyone's radar, by the time financial media is covering it and your colleagues are talking about it, the most lucrative portion has already happened. Think about the psychology of this for a moment. When does the average participant finally recognize an opportunity? Only after it's been substantially validated, after prices have already moved significantly, after the risk-reward equation has shifted from favorable to mediocre. They're seeking comfort in consensus, waiting for everyone else to confirm what they're seeing, essentially buying reassurance at the cost of profitability. The transformation in your results happens when you develop the courage to act on subtle signals before widespread recognition occurs. Smart money doesn't wait for confirmation from the crowd. They position themselves during the quiet accumulation phase, building stakes while prices are still attractive and sentiment remains skeptical. This gives them not just better entry points, but an enormous psychological advantage. They get to ride the wave created by later participants piling in, rather than being part of that late-arriving crowd themselves. Behind the scenes of every explosive move that seems to appear suddenly is this pattern: early subtle positioning, followed by gradual development, followed by public enthusiasm. If you want to capture the full magnitude of these moves, you need to be present during that first phase, not the last one. This requires independent thinking, conviction in your own analysis, and the emotional resilience to stand apart from consensus when your chart setup is telling you something different than what everyone else believes. What makes this approach so powerful is understanding another crucial distinction that most traders never grasp. The market contains two fundamentally different types of movement: ripples and waves. Ripples are those daily fluctuations, the constant noise that captivates everyone's attention, keeping them glued to screens and feeling perpetually busy. Waves are the significant trends that actually create transformational wealth, the moves that carry prices substantially from their starting points over weeks or months. Here's the hidden truth that changed my entire approach. A trader who successfully identifies and rides just a few major waves will dramatically outperform someone who spends years frantically chasing ripples. The mathematics are undeniable. One properly captured wave that delivers 100 or 200% gain creates more wealth than dozens of small scalps combined. Yet most traders spend their entire careers focused exclusively on ripples, mistaking activity for progress. The journey toward this realization requires a complete identity shift. You need to stop measuring success by how busy you are and start measuring it by the quality of opportunities you capture. Trading less frequently but with greater conviction, when clear setups present themselves, often produces far superior results than constant activity. This isn't about being lazy, it's about being strategic, about recognizing that your edge comes from patience and selectivity, not from hyperactivity. If you've realized that chasing daily noise has kept you from catching real opportunities, write in the comments, "Waves create wealth." The framework I've shared with you today isn't just theory pulled from textbooks. It's the distillation of real experience, of watching thousands of charts, of making costly mistakes and learning from them, of discovering what actually works when you strip away the noise and focus on what matters. Learning to identify explosive moves before the crowd, to position yourself with conviction, and to maintain the discipline to ride those waves through their inevitable fluctuations. This is what separates transformational results from perpetual frustration. What's fascinating is how these principles extend beyond trading into every area where decisions under uncertainty matter. The ability to distinguish signal from noise, to act when others hesitate, to maintain conviction through discomfort. These are universal skills that create extraordinary outcomes in any endeavor you pursue. I've created this channel specifically for people like you, thoughtful individuals who understand that real mastery comes from depth, not shortcuts. Each week, I break down these concepts into practical frameworks you can implement immediately. If this conversation resonated with you, if you found genuine value in what we explored today, hit that subscribe button so we can continue this journey. Together, the community we're building here is focused on substance over hype, on meaningful insight over superficial tactics. I genuinely love to hear your thoughts in the comments, particularly if something shifted for you during this video. If you made it all the way here with me, drop clarity over chaos in the comments so I know this message connected with you. And if this exploration opened your eyes to a different way of approaching markets, giving the video a like helps others discover these ideas too. It's a small gesture that amplifies what we're building together. There's a video right here that explores how to maintain emotional discipline when these explosive moves test your resolve, the perfect companion to what we discussed today. Click and continue with me over there to discover how these principles work together to create a complete framework for catching big moves before they become obvious to everyone else. Until then, remember, focus on the waves, not the ripples. The opportunities are already there, waiting for those who know how to recognize them.